Alright, ladies and gentlemen, welcome back to the channel. Here in this video, we are going to be going over this 8K filing from AMC and Antera Capital. I'm not sure exactly how to pronounce this, but this did get quite a few comments in yesterday's video. It may or may not have contributed to the drop that we seen on Friday, and it does have some implications, but I want to get everyone up to speed on what is going on. Besides that, we're going to be going over the Ortex data, Stock O Tracker data, as well as the economic calendar for next week, because you got the holy grail of data points, which is going to be inflation. And the markets are actually expecting inflation to go up quite a bit on this next report. So let's get into all of this information. If you guys find value out of this video, as always, hit that like button and subscribe to the channel. So first things first, I want to start with this. AMC and Antera jointly loosen lockup restrictions, but why? The summary: after the close on February 9th, AMC Entertainment Holdings released an amendment to their agreement with Antera that both parties can sell additional shares into the market despite previous lockup provisions. This is categorically bad or neutral in the best case scenario for AMC preferred shares, the APE shares. How it filters through the arbitrage spread to AMC commons remains unknown. This announcement has certain implications regarding signaling to the market in terms of the status of their pending shareholder vote. That might leave you a little confused after reading the summary. So let's get into the actual 8K. Now, it says the deal with Antera Capital only closed on February 7th, while the deal was announced back on December 22nd. It was subject to an HSR waiver, and it says, I and most market participants I know had assumed that the deal had already closed in late January, likely prior to the pre-14 release by the company on January 27th. This is surprising, but by itself doesn't really mean much. So to summarize that in English, basically they announced the deal before it was ever closed. Now it's closed, not a huge deal, but there was a gap there, right? Now, Antera and AMC agreed to allow each other to sell a significant number of AMC preferred unit APEs immediately. Their prior agreement required them both to hold their shares until after the special meeting day, tentatively set for March 14th. With this announcement, Antera is allowed to sell up to 26 million shares, and AMC is allowed to sell up to 140 million worth of shares, around 60 million shares at current prices. Now it says scenario 1. This is the most likely kind of conclusion to all of this, or at least this 8K filing. The most likely interpretation of what AMC and Antera are doing is that they're preparing to sell some of their holdings, quote, earlier than expected, while the price of APE and in some sense AMC are still relatively elevated. One must remember that for AMC, the whole purpose of this exercise was to allow them to issue equity to the market and raise funds for corporate purposes. There's a world where they would rather play it safe by raising 140 million now with APE prices at $2.50 a share versus waiting until after the March 14th vote date in case shares may be below $2.50 per share. Likewise, Antera, who purchased about 250 million APEs at about $150 million, would normally have to wait until after March 14th to sell their shares. By being able to sell 26 million shares at around $2.50, they'll essentially get about 65 million and reduce their cost basis of the remaining APE shares to 40 cents each. This significantly de-risks their position and generates more profit on the deal. Now, long story short, I think I'm bringing this specific conclusion to your attention because I think that's the most likely outcome to what we're seeing now. I don't think they're dumping all of their shares right now, but I do think it's possibly probable that they did sell some on Friday to exactly this, lower their cost basis, right? And that's pretty self-explanatory why they would do this. Now, I don't think this really matters in the grand scope of things. 26 million shares of APE. It's not even like they're directly selling AMC as of right now. Yes, they are technically the same asset, so it's going to have an impact on AMC, but I think more so than ever, right? There's two sides to this. And I want this to be very clear. There's one aspect of why the hedge funds are shorting AMC in the first place. It's fundamental reasons, right? They probably don't like us. They don't like you. They don't like me. They don't like us. Let's be honest there. But that doesn't necessarily translate into money. How the hedge funds are viewing this is they see a company with a lot of debt that is unprofitable. They're shorting the company. Now, there's really one of two ways this whole thing plays out. Like you've seen reported to us many times, and I've talked about this many times to you guys, AMC has the opportunity to pay off all of their debt, to raise up to $22 billion. If that happens, well, I think you get the short squeeze. There's no if and buts about it. I think the stock will squeeze. If AMC could pay off all of their debt tomorrow, 100%, no doubt in my mind, AMC would squeeze. Now, what would that mean for the actual share price? You'd probably see some dilution, right? Obviously, you would see some dilution. But I think the counter to that is fundamentally you wouldn't be able to be short in AMC anymore. That's kind of the trade-off there. Or this plays out as a big epic failure and the price completely collapses before they're able to raise any capital. And I think the latter is not the most likely outcome. The most likely outcome is AMC pays off a substantial amount of debt and we get the short squeeze. Now, on top of just raising capital, in my personal opinion, the box office is going to be much better in 2023. So it's not going to take as much capital to support AMC until they are profitable. And it's very well possible they give us a positive EBITDA number coming on their earnings report or a free cash flow or possibly a net profit, just depending if people bought a lot of popcorn or drinks or whatnot at the theaters in Q4. Well, that is the thing that is going to squeeze out shorts the most. And at that point, I think you're going to get hedge funds even. I think you're going to see big money players trading AMC expecting this upside move once earnings come and they're bullish, once AMC can pay down some of their debt. That's the whole bearish case on AMC, is they'll never be able to pay down their debt. Eventually they'll go bankrupt, so why not just hold our short position for a couple of years? That's the argument here. If that narrative becomes untrue and not a reality, not even a possibility, well, you're going to get shorts covering in a huge way. So believe it or not, this whole reverse stock split or even raising capital doesn't have to be a bad thing. You might actually see the stock rally off of that because we know about it right now. So the markets have already priced this into AMC. The markets are a forward-looking instrument. And when they're forward-looking, I mean, it's not like it's going to be a huge surprise when AMC raises capital, right? We know it's coming. So I think for a lot of reasons, the situation is very, very bullish with AMC. Now, let's get into some of this Ortex data and then the Stocko tracker and then the economic calendar. So as far as currently, the live short interest of free flow is 23.04%, as high as it has been since June of 2021. 118.66 million shares that are currently sold short. AMC is still on the threshold securities list. Cost to borrow average of 307%, cost to borrow max of 358%, and cost to borrow minimum at 0.35%. Interactive broker short availability had about 60,000 shares available to be traded on Friday at the close, with a cost bar rate around 167.5%. These numbers very indicative of a short squeeze. And I do want to point out as well, Bed Bath & Beyond, even though the stock has went down a lot as of recently, the short interest being at about 50%, as I reported to you guys in one of the last videos. I mean, the markets were fully prepared for this stock to go bankrupt. They did not expect the stock, or the company I should say, to raise capital. In that case, a lot of people are talking about the short interest is overdone. It's overblown for right now. Bed Bath & Beyond technically has about 1 year of cash in the bank to support their business operations. So it's going to give them some time. And in the meantime, it's, not going to mean they're going bankrupt. It's not going to, their share price is not going to zero. Long story short. So it does set Bed Bath & Beyond up for a potential short squeeze, which could also, as you know, influence AMC. Now, I'm more bullish on AMC. Obviously, AMC is not in the same scenario as Bed Bath & Beyond, but bankruptcy. You've seen what's happened over the last couple of weeks and couple of months with Bed Bath & Beyond. The stock went parabolic. Now the short interest is even higher. Bed Bath & Beyond is also on the threshold securities list. And you're seeing big institutions like Vanguard that are buying Bed Bath & Beyond, even buying AMC as well. They're not buying these for fundamental reasons. They're buying these for short squeeze trades. Now, as far as the Stonko tracker data, what we have in store for next week is 5,000 calls in the money, 293,000 calls that are out of the money, 98,000 puts that are in the money, and 268,000 puts that are out of the money. Now, this option activity could definitely help increase AMC's share price, but unfortunately, you have very important economic data that is going to take precedence over all of that, really over everything. On Monday, you don't have anything really. You do have Fed Bowman that speaks at 8 o'clock in the morning, but then on Tuesday at 8:30 in the morning, you are going to get the inflation rate year over year, core inflation rate year over year, core inflation rate month over month, and just the inflation rate month over month as well. Now, the important ones here are obviously going to be core inflation month over month and inflation month over month. And you're actually expecting a pretty big increase, at least on headline inflation, from last month's reading of 0.1% to now 0.4% month over month. 0.4%. I'm not the greatest with math. Not terrible at the same time, but I do want to make sure this is correct for you guys. 0.4% month over month is 4.8% inflation on a year over year basis. So almost 5%. So if you get that number, I mean, it looks like the markets are expecting it, or at least analysts, but I think it would be a very negative thing for the markets. Now, if it comes in at 0.3%, 0.2%, that might be more of a bullish reaction. But if it comes in 0.4% or higher on the headline inflation rate, not going to be good. Most importantly is going to be core inflation month over month. Last month's reading was 0.4%. You're expecting another 0.4% increase, showing inflation is not slowing down. And personally, I think the Fed knows what the inflation report's going to look like. I think that's why the Fed did already, come out. Fed Waller, Fed Bostic, Fed Kashkari, Fed Jerome Powell, they've all come out and said the same thing. The terminal federal funds rate, in which that's the rate, basically they're going to take the federal funds rate to and keep it there before they cut. So it's like the highest the federal funds rate will get. That is called the terminal rate. They've all come out over the last couple of days and said the terminal rate's going to be higher if inflation does go up or if economic data continues to be strong. So in that case, I'm a little worried about next week. Not gonna lie to you guys. In the sense of it's not a crush the whole trade, crush the whole markets. It's possible, but you could see a lot of volatility, and you could see some downside heading into next week, especially on Tuesday. Now, we will go over the full economic calendar in the next video. I do want to give you guys a brief look at the technical analysis. So one of the best things that I'm currently seeing with AMC, at least what happened last week, is this Friday close. You really did see a ramp up into the close, which was a very good sign. If people were actively going out and buying the stock into the close, that is key. And looks like we did not quite hold the 496 level, this level I wanted to hold. This was the lowest wick on January 30th. We're at $4.89, so it's not too far off that level. That's the key that I want to hold. Preferably, we want to get above $5 per share on Monday, hold that level into CPI, and if you do get a bullish CPI reaction in the markets, it's going to feed very positively into AMC stock as well. You are still pretty comfortably off the 52-week low, though, for AMC. And I think the lower you get really sets you up for potential. Like we've talked about many times, if you bought AMC at the low throughout the last 2 years and held it for 2 to 4 weeks, you've always made money, right? Unless you just bought it and held it the whole time, then obviously not. But if you were just trading it, you always made money. So depending on how you guys personally hold or trade AMC, everyone's got their own different strategies. it can be a very big opportunity, at least even with the options. If you're a long-term, hodler, you can buy some options when you hit the low, right? And I do think there's a big potential for a huge reaction next week. Up or down could send AMC to $7, $8 again, or could send AMC down to $3.50, right? I think that's the potential we're looking at. We'll go over a price prediction in the next video coming tomorrow. More in-depth, what people are expecting, what the data's looking like, what the technicals look like, and where the probability is of going up or down, all the stuff we usually talk about on Sunday. That is basically going to do it for this video, guys. That is why I am currently so bullish on AMC. I think no matter what way this plays out, it ends in a short squeeze. The way it's looking, the AMC will raise the capital and substantially put the business in a better fundamental place. Again, which will lead to a short squeeze. So that is it for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Most importantly, you guys enjoy the rest of your weekend, and I will see you in the next one.